Hello, everybody, and welcome back to another episode of What? Hello, everybody, and welcome back to another episode of Trading Brains. I'm your host, Evan Grave, here with my co-host, Angela Messina. Angela, how are you doing today?
I'm great. How about you guys? Oh, you guys,
Uh,
you, me, and it's morning.
Me
So
and my invisible friend Simon, and
Simon,
yeah, Simon.
Simon, I got Larry.
I don't know, it was a random name. Oh, Larry. Okay.
Larry, it's always
Anyway,
my go-to person.
listeners, as you can tell, maybe we're a little off, but it's an early morning for Angelo, so let's cut
Wait,
him some slack.
just a little off though.
A little off, a little. Yeah. There was only one S, right? Oh, not even S. Yeah, I guess you didn't need guys at all. Anyway, back to the episode topic. Today we have a very interesting episode. I'm sure a lot of you have heard about it. Maybe don't know about exactly what's going on, but it's been in the news, so you heard a little bit about it, or maybe you know exactly what's going on and or were involved in it. So we're going to talk about what happened with the stock market over January and February, most recently with GameStop. I know it got really heated in January 27th-ish, 27th to like 29th, 30th. But yeah, for those of you who don't know, GameStop is a video game retailer company. They, brick and mortar store. They sell video games, and through their stores and online. And people thought, or these hedge funds thought that GameStop was a failing business, kind of like Blockbuster, right, where they thought everyone was just going to be buying games online. And while that is the case, like the trend is towards people buying non-physical copies of games, right, just downloading the software. There are still people who buy physical, and the next generation of consoles is still going to have disc trays. So GameStop isn't necessarily going away. However, what happened with GameStop in the stock market, the interesting part is that the hedge funds decided that they were going to drive this company into the ground, and they gave a lot of bad press out about it, or they put out a lot of bad press about GameStop, so that their short positions could earn money. And so, if you don't really know what a short position is, it's basically you will borrow a stock from someone else who holds that stock, right? And you'll basically get money for, you'll give money for that stock. And then since you are betting on the price going down, if the price of the stock goes down, then you will, buy it back, and then you can return that stock to the owner and then keep the difference of what you made, right?
Yeah.
So let's say GameStop is at like $15 and you buy 100 shares at $15 and it goes down to $4. You got the money worth of 15 shares, and then you bought back at 4, so you got the difference there, right? Which is like $9 per share. So that's like $900.
It'll be a big difference from. It's like a margin, like whatever the margin in between, the difference between the two.
Yeah. Yeah, absolutely.
And you brought up a good point about like the digital and the disc, and the kind of worst part for GameStop, the discless. Like, so let's just say I buy a game online, an online copy for my PlayStation 4, and if I want to buy my PlayStation 5, I could transfer all my online games over, like FIFA 21, Assassin's Creed, Call of Duty, Warzone, any game that I buy online, I can transfer over, which also that hurts GameStop because now you're not going to GameStop and buying.
Right.
Now they're thinking about other ways trying to make money, but I think they're just barely surviving. So I'm shocked that they still haven't had a platform just basically be like Amazon in a sense and just sell.
Right.
Sell.
Yeah, I mean, yeah, that.
Why?
Well, let's get into like the business part of like how we see GameStop going into the future. But before we do get into that, I want to cover like why it was so significantly in the news with the short sellers, the hedge funds, and Melvin Capital and Robinhood and all this kind of crazy stuff, right? So Basically, last year, around July, this guy whose name I don't remember, I think it was Ryan something, right? But he was the CEO of a e-commerce platform called Chewy.com, and I think they were, selling like pet toys and like accessories. So he bought I think 13% stake in the company in GameStop, so he became quite a big, holder of the equity of the company. And by then, there was a Reddit user on a Reddit group called Wall Street Bets, which his username was Deep Fucking Value, and he put $50,000 in call options on GameStop. So a call option is basically you saying, I think the price of GameStop is going to rise by X date, and this is how much I think it's going to rise, and you can basically earn more money by doing a call option than by just buying the stock as it is.
Mm.
Now, the reason why he did that was because of what I just said earlier, which is the consoles of the next generation are going to have disc trays, so they're still going to be able to purchase. People are still going to be able to purchase physical copies, and some people actually do prefer buying physical copies. And so, he just thought it would be a good idea to put in $50,000, right? Lo and behold, a couple months go by. And like I said, that other guy, Ryan, I think was his name, Chewy.com CEO, he buys majority stake. The same guy who basically understood what was going on in the 2008 financial crisis, Michael Burry, he was the one who kind of predicted the mortgage-backed securities kind of fallout, or that whole financial catastrophe. He actually bought also a substantial amount of GameStop stock. I think that was around September, October, maybe. And all people needed to hear was good news about the stock, because it was hovering around maybe $11, $14, somewhere around there for a good couple of months late last year. And one of the users on the Reddit group on Wall Street Bets actually put up a post explaining that all these hedge fund companies, which are trying to drive GameStop into the ground, right? They're trying to just completely make it go bankrupt and destroy it because they want to make money on hedging, right?
Yeah.
They want to make those margins on the stock going down in price. The scary thing about short selling is, though, like if you buy a stock and the price goes up, there's no limit to how much you can make. And if the price goes down, well, the limit is when it goes to zero. But in short selling, it's the opposite. There's no limit to how much money you can lose, because if you short sell and the price doesn't go down like you expect and it instead goes up, then you get screwed and you have to pay a lot of money.
Certain time frame.
Huh?
It has to go by like a certain
time.
Yeah,
exactly. That's a really key part of this story, which is when you do a short sell, when you short a stock, you have to specify by what time you will cover the stock, which means by what time will you buy it again and then give it back to the person you borrowed it from, right? When you first short it, you borrow the stock from some other holder, whatever, you have to buy it back, whatever the price is, doesn't matter. By that time period, you have to buy it at whatever price it is and give it back. Now, the guy who wrote that Reddit post realized that the hedge funds were shorting GameStop stock at 140%, meaning they shorted more stocks of GameStop than existed of GameStop stock, right? So they were like the hubris, I would say, I guess, or like I don't know, they were so smug and they were like, oh yeah, it's definitely going down. We're just going to make so much of shorting the stock, right? And the Reddit user was saying, like, look, if any good news comes out about GameStop, that'll cause the price to rise. And other, people on Reddit and on Wall Street Bets will start buying the stock, which when people are buying all of that stock, right, that means the supply goes lower, and then demand goes higher. So the price starts rising. But the crazy thing about this story is the key part about the story is the short sellers, because they have that time limit, right? They have to then buy the stock again. Right? So when they buy it, the price goes up again to cover, their short.
Mm-hmm.
So because of that, they have to buy it at a higher price. The price goes even higher, and then the other hedge funds have to buy that stock back at a higher price. And everyone else in the stock market, all the retail investors, people who are on Wall Street Bets, people are hearing about it on Twitter, whatever, everyone knows that the short sellers have no choice but to buy the stock back, and that will increase the price. So because everyone knows, and it's public information, you can find it, on your own, what the dealings of these hedge funds. Because everyone knows that they have to buy it back, everyone just decides, okay, let's all buy GameStop stock, YOLO into it, put in as much money as we can, and just hold. And no matter what, they're going to make money, because at the end of the day, the hedge funds have a time limit on when they have to buy the stock back.
Mm-hmm.
So it's basically like, they're forced. There's this forced demand there. So everyone was just buying. And that's why you saw in a span of 48 hours, GameStop stock went from, I think, $72 to $420.
Yeah.
Yeah. And one of the big hedge funds, or one of the main hedge funds that lost a lot of money, Melvin Capital, was pretty much bankrupt. And you had like some other companies try to help them out, bail them out, and basically another like really interesting kind of how do you say, not spin, but another convenient thing about the story is, how Robinhood and Webull and like other companies decided to stop trading on GameStop, right? I mean, you could sell your position on GameStop or AMC or all these other stocks. Yeah, but you couldn't buy anymore. And because of that, people thought it was market manipulation. I personally also believe it's market manipulation. However, Vlad Tenev, he is the CEO of Robinhood, and he said that because of clearinghouse requirements, basically, they need to put up the money, a certain amount of money away to the clearinghouse company that is, managing their trades, to manage the risk of all of the volatility of GameStop stock, right? Because it's going up like crazy high, and there's no limit to how high it could go because the short sellers have to close their positions. So he goes on to say that, like, it's this reason why we're doing it, and because clearinghouse requirements, there was a liquidity problem, but it's kind of doublespeak, because he went on the news saying there was no liquidity problem, but then the next day they actually had to like basically raise funds from investors and like crowdfund it too, almost, to gain money. So he's kind of saying like one thing and then actually doing it's like the other, the opposite. And like the whole fishy part of this is that Melvin Capital was going to go bankrupt, but then another company bailed them out. That other company that bailed them out, is one of Robinhood's clients. So when you trade on Robinhood, your trading data, like the trade you make and how much you make it for and when you make it, whatever, all that stuff goes through that company, right? And then they will basically trade, they'll take a piece, they'll take like, pennies off the dollar of your trade. Yeah, because they'll trade before you actually make the trade. And whatever, that's just the way it is. But for Robinhood, it's like an awkward position, right? Because who knows what, if he gets a phone call, if the CEO of Robinhood gets a phone call in the middle of the night saying, hey, we need you to stop these trades on GameStop and AMC and all of these volatile stocks because our hedge funds are losing fucking billions and billions of dollars, right?
So
yeah.
Exactly.
Exactly.
Do you help the clients, or do you help the people who are making the business grow? So
yeah. I mean, do you help your clients, or do you help your customers, or or do you help your employees? It's like,
don't get me wrong, that's a sticky situations. People who back your company up, or people who are supporting your company, such as consumers. Which one do you support? Because
now to Vlad's credit, like other companies also reported the same issue.
yeah.
Webull also reported that they had clearinghouse requirements that were limiting them from allowing buys on GameStop and AMC and those kind of volatile stocks.
I think they all made the right move. Like, I'm not saying like it was the right move, but like in the sense of when I say right move, I think they had to protect their assets.
Yeah. For them, exactly.
They're not helping out the small people, but if let's just say something goes wrong, it's not us trying to bail them out; it's the clients. They're trying to bail them out. So you help your friends; they help their friends out. They're more friendly than all these consumers. Because there's other apps that you can use. So well, like I know a lot of Fidelity, and Fidelity's a very one too. So
so I mean that's basically the story of like what happened with GameStop and AMC in the same vein. It was like a similar thing that was going on. A lot of hedge funds were shorting that stock as well, and so over the span of a couple of days, it all came to a head and the retail investors really just creamed the hedge funds because the hedge funds had to buy back the stock at whatever price it was. They had no choice. They were on the time limit. They had to buy back at like $400 where they thought it was gonna go to zip. So.
And going back, I know this whole story about GameStop, AMC, but you said about Ryan, and it was the co-founder named Ryan Cohen. I just want to give.
Okay.
I know you were.
Yeah, see, I got the first name right. Name right.
He was the co-founder, of Chewy, and so okay. Besides, like with the whole thing, what? Like, I think this is like more a loaded question.
Okay.
Now, since this information that we have, right? You have the AMC and GameStop, how it happened. That basically, in the sense of if everyone buys. Anyone can actually control the market in the sense.
Right. Yeah, and actually the scary thing is that Congress and a lot of politicians are deciding that they want to look into whether or not they will see these social media platforms such as Wall Street Bets or any forum really. It could be on Facebook or it could be on Reddit, whatever, is practicing market manipulation. And honestly, I believe that it's not. I firmly believe that it's not market manipulation because Deep Fucking Value, that user, the Reddit user, was just showing like, hey, here's why I believe GameStop stock is gonna go up, blah 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 blah. But he's a dude on an internet forum just posting about his investments.
People could not believe him. Be like, whatever.
Yeah. I mean, he has no responsibility, and everyone has their own free choice to decide whether or not they want to invest in something. And he, obviously, that's not. It doesn't fall within the realm of him as a financial advisor giving investment advice, right? So, honestly, I don't see it as market manipulation.
No, I don't.
But it's just the people coming together to realize a certain fact about the way the market is structured, right? These hedge funds were so arrogantly assured that the stock was going to go down, and that's why they were over leveraged. You can't short more than the amount of stocks that exist. That just doesn't reflect a world that should be reality, right? And so, retail investors saw this and they just exploited it, and that's fine because hedge funds do that all the time.
Because they do. We just beat them on one occasion, not on every single occasion. We beat them on one single occasion. Not just say GameStop.
I mean, the problem is that every time retail investors, do something like this, they'll just flip the board game and they'll just stop people from trading. It's like because I think on the other end that is market manipulation for these brokerages to actually close out buying and selling. Because Robinhood was all about democratizing finance, right? Democratizing investing.
But then I feel like this conversation you get in this big wormhole of, okay, do you protect the businesses? When I say businesses, these broker companies, or a single person, it's multiple single people, but you make everyone have the money, or also a big company that supplies multiple jobs.
big company. What do you mean, the hedge funds?
And the hedge funds or that, like, because we one
No,
melt.
I mean hedge funds. We really shouldn't have. Like they were a mistake. Honestly, I think.
I'm just saying, like, this is where you go. Do you take out the businesses or you take out individuals? It's not like you take out individuals because normally each individual has a paycheck coming in.
Right. Yeah. Well, I mean, Robinhood is in a tough place, like you
Exactly.
said. Like they're in a tough position, really. And if it really is the fact that it was the clearinghouse issue, I think that's fine. I think the communication from Vlad's part on it was unclear and kind of like
No,
I said, double speak.
he was
He was.
under pressure and it was him didn't know what to say.
Yeah, pretty much.
He was panicking. I was like, oh,
I don't know if you heard the interview he did with Elon on what's that new app, the new really popular app. I don't know why it's like escaping me the name of it. Clubhouse.
Oh, yes, Clubhouse.
Yeah, I have an Android, so I can't join, even though I got an invite.
Yeah, you probably got the same invite from our mutual friend Ryosuke.
Oh, you got one from
Yeah,
too?
he messaged me on Instagram, but that's personal note. But
okay.
I have one now too, and it's coming up. So I think that could be actually a big thing because I know a lot of people are talking about it. But look at every other social platform that had started small, started somewhere.
Yeah.
And like Elon Musk too, like when he says something, he has so much influence that he can also say a random thing. Hey, buy Tesla stocks, and everyone can buy Tesla stock, whatever, even like a fraction of a stock, and try.
I mean, it's really
the price.
It's really funny because I think it was like November or December of not last year. It was 2 years ago. Mm-hmm. He tweeted out like Tesla stock is too high, IMHO, in my honest opinion, and Tesla stock just went down like 20%. Because people just are like, oh shit, like they got scared and people decided to sell it, and like it was really funny. A lot of people on Twitter and stuff were commenting like, what the fuck, why would you do this? Like you just took away part of my college like tuition. I'm like, damn, like you shouldn't stake your college tuition onto a stock. But yeah, it's just fun. It's laughable now because now the valuation was like they did a stock split, and on top of that now it's like $810 or so per stock. Yeah, and at the time it was 400, whatever. And companies like Tesla, they all had a meteoric rise since the pandemic. Distribution of wealth in the U.S. is, astronomically higher. It's more unequal than it has been since before the pandemic. But yeah, I don't know. Musk, he likes to talk about Bitcoin, of course. He's been like really into it recently, I think, and he also talks about Dogecoin. So
yeah, like Dogecoin always have been like a meme, and you have Bitcoin too, which the money on them per Bitcoin, trying to mine Bitcoin so much, but also now he wants to buy, like you could buy a Tesla, a car in Bitcoin, so now that's going to fluctuate this whole cryptocurrency by a lot, because especially in Dogecoin, because it's such a meme, and it's not even like now is at what six cents now.
Yeah, it's like 6-7 cents.
If you bet it on one was not even in a penny.
Yeah.
But like now everyone's trying to just buy as much as they can, and whatever you have left, put more money into it. Just keep on sinking in when it's low, and hopefully it pays off.
Yeah. Well, I mean, to the moon, man. To the moon. People saying they want to bring Dogecoin to $1. Okay, all right. But we'll see. Like again, it was a guy who made this. He made Dogecoin on 3 hours of coding on a Saturday, as a joke, right? Because like everybody was making cryptocurrency at the time, and he made this cryptocurrency as a joke. Some people think it could become legitimized. I'm not sure about that because you can mine Dogecoin infinitely. So it would be just like a fiat currency that we have right now.
Yeah, but also like it depends on how Bitcoin was when someone made Bitcoin. I don't think it was what it is now. Couldn't you just update it and make it more kind of like that? You can't mine right away like this. Like
I don't really know about that. Yeah, I don't have the facts on that. But I think Bitcoin has a limited number of Bitcoins that can be mined. right? There's a cap on how many can be mined in the world.
Okay.
So, yeah.
But that's what I'm saying. Like, okay, like that in place like the moment they made it, or that was in place later on. Because now the price on how it got raised up to this high on Bitcoin. You know, DOGE 6 cents. If you have a billion, gajillion, whatever, yeah, you have a good chunk of it, but it's only 6 cents a coin. Yeah. Well, Bitcoin's $1. One Bitcoin's 40 something?
47,000. Yeah. Right now. I think it's $47,000.
You get 10 of those, you're already at almost $500,000.
Yeah. I'm looking right now to see how much it is.
So that's what I'm saying. Like I think it probably over time you're always updating.
It's at 49,000.
Okay.
49,500.
Get 10. So you need 11.
Yeah, it's going up.
So you need 11 Bitcoin to be $500,000.
Yeah.
So like a lot of people
are up by a lot today.
Well, now with
Bitcoin holders
or Daddy Musk. Daddy Musk.
Yeah. I mean, now that Tesla's capital structure is planning to have part of it be in Bitcoin, I mean, it's a smart move on his part because Bitcoin is becoming legitimized in the finance world. Like the American government is starting to regulate it a lot harder now. They want you to report any earnings that you make on cryptocurrency trades. Mm-hmm. And you have institutional investors actually, investing in part of their portfolio, obviously not all of it, but part of their portfolio in Bitcoin because they see the potential there. And when I say institutional investors, I mean funds, so like endowments of universities or big health insurance companies or something like that. So you have all of these, big name investors who are now going into Bitcoin, and that gives it a lot more legitimacy. And that's part of why I think the price is going up. For Tesla, like with Musk, I think making that decision is smart because if the price goes down, then Tesla can actually write it off as off of their taxes, right? Mm-hmm. They can write that off the books on their taxes. Now, if it goes up, they just have more capital and more money that they can spend on
it fluctuates. So if it's on the rise, you're going to keep on going. Now you talk about it's what 49,000. Can they ever do another split or multiple split? Or
I think there is going to be another one in the future. But listeners, correct me if I'm wrong. I just started getting into Bitcoin and learning about it. So this episode I'm an amateur. Maybe in the future I'll be able to talk more in depth about it. But I think there's going to be another split down the road. We are I think we've mined almost 80% or higher, maybe around 80% of the mineable Bitcoins in the world. So, should reach 100% maybe by 2050 or something.
Wow.
But regardless, that makes it like gold, right? Because then you have an actual cap on how much is actually available in the market, which is good. Because with what's going on with the American dollar right now, it's we're not backed by the gold standard. We just print money to try to get out of any economic disasters that we have. And people weren't working during the pandemic; they just got printed money. So, I think a lot of people are trying to save the value of the dollars that they have by putting it into Bitcoin and Ethereum and other investments, right? Even gold and silver too. Silver has done pretty well, I would say, in the past couple of months.
Oh, because now it's even with silver and gold, there's only you can still mine gold and silver, but it's only certain places that you can find it. It's not I could go outside and just start digging a hole in my front yard. Silver.
I mean, there are people who invest in the stocks of mining companies, right? And generally, if the price goes up, then
people buy the currency. Hopefully, the valuation can go up in the yen or the dollar, or the euro or the pound.
Yeah, I think it has. The euro dipped a little bit back when it first hit, when the pandemic first hit. I noticed that because like I was able to buy a bit more euro when I was in yen.
Yeah. So that's why, like, the market, it fluctuates. Like, you don't know what's going to happen. Sometimes it goes up, sometimes it goes down. But being backed by something that has like a limit, even especially with Bitcoin being that much, like there's only, let's just say, for example, 100 Bitcoins out there, and I know there's more, but there's a limit. There won't be 101. So having that, like, supply and demand, like there's only having 100, that value can go shoots up unless they start producing more. But when you produce more, now that value goes down. Simple, right there. Now,
I mean, I don't know about the value going down once they are enabled to print more.
Well,
like again, like the value of a Bitcoin, it's always going to be dependent upon the buyer and the seller, right? So if like at a restaurant, somebody says, "I want you to give me 0.00005 Bitcoin," because Bitcoin costs so much, you need to like make it at a fraction.
Mm-hmm.
You can just say no, I'm not going to pay that much, and then not dine at that restaurant or not pay for those services, whatever.
Oh yeah, before you eat, of course.
Yeah, of course, before you're not going to dine at that, but that's what I meant.
Have the most expensive stuff ever now. Eat it. This was delicious, but I'm just not going to pay it. Bye. Well, no. And that's when you cleaning dishes for the next 4 shifts.
Or go to prison, yeah.
Or go to prison. Well, like Dogecoin, like you could start. I know we both are mining Dogecoin as well as Pi too. Pi is another cryptocurrency that Stanford PhD students are created.
Yeah. They made that.
Now a lot of people are making other stuff because you never know what's going to happen.
Yep. I think honestly, it's worth it to diversify, and like if you just put even 1% of your portfolio in something small like Dogecoin or something small, like it's honestly you're not going to lose that much. You're not going to miss, and if it goes up in value, then you can say that you participated in it and you didn't lose out on it.
If it worked, it worked. If it didn't, whatever, it didn't. You lost X amount of dollars. I think I have 1,056 Dogecoin of stock that I got. And
you're 1,056 Dogecoin? Nice.
No. And I use like Robinhood, but I probably want to switch with Fidelity. But we'll talk about that later.
Yeah, we talk about that. I have 165 Doge, so it's not that much, really. No. I spent like $13. It's like nothing.
So yeah, and then like I have like another like 85 cents left over buying power, so I'm just putting my 85 cents. So I just bought it. And that's what I just. So whatever after I buy or sell, whatever I have, like if I get less than $1, I just buy a little bit more now, and that's what.
I have absolutely zero brokerage cash, so like all of my stuff is in an investment right now.
Yeah. So that's what like legitimate what I'm doing right now. I'm just buying, sell, buying, and which I know Monday is President's Day, so you gotta wait.
Yeah, so the markets are gonna be closed. Yeah, we got an extra day to assess what's going on.
All right, so let's recap for about GameStop and AMC. Basically, from
I mean, this is changing the financial world. At least the GameStop and AMC deal, like that whole
predicting like the future. This can actually be in a way of for us, the smaller like consumer, can actually help to predict and actually band together and trying to beat supply and demand. Now with this finance, it gets a little bit tricky. So with this being a little bit more tricky, you have to be careful. Like, of course, I bought a bunch of stocks, and if it goes up, some people need to just be worried or aware that sometimes you need to pay yourself. Sell the stock if you're gonna hold. If you're not gonna hold it, if you're gonna trust